Hello and welcome back to DVD 2. I'm Vince Danzioni and you're watching Making Money from Financial Spread Trading. We're just going to carry on exactly where we left off in DVD 1. And in DVD 2, we're going to go on with the presentation. I'm also going to go a little bit online onto the internet and use binary.com and also show you Sharescope as well, how I use it in action. All right, so in this section, what we're going to talk about now is shares, ETFs, exchange traded funds, and stock indices. And personally, this is where I see huge opportunities for you to make money, not just say in your home market, but worldwide. So you can spread bet shares, and such as the shares in the FTSE 100, the FTSE 250, European shares, Australian shares, the Dow 30 shares, S&P 500, NASDAQ, and many others. That's why I'm so excited about the share market, because there's just so many opportunities. There's also something called exchange traded funds, or ETFs. And what an exchange traded fund is, it is like a wrapper and it's a basket. And inside the basket, you've got various shares. So for instance, a telecom ETF would have shares of telecom companies in there, an oil ETF, a real estate ETF. And what that does, it diversifies you a little. I'll show an example of a biotech ETF. Now, if you invest in one or two biotech shares and you happen to pick two bad biotech shares, then you could be in big trouble. But if you invest in a basket, an ETF of biotech shares, it spreads your risk much more. You can also get global exposure, even with just a spread betting account or just a normal US brokerage account or US. You can trade shares in Russia, Spain, Brazil, India, and by going through an ETF, it's still listed in the US or a UK exchange. Much easier, because to try and buy shares in India or Russia or Brazil for a small trader, it's not easy. But by going through an exchange traded fund, you can get exposure to that market. Inside this ETF are all these shares. Now, of course, you can spread bet these shares individually. Amgen, Celgen, Gilead, Biogen, Alexon, they're all shares you can spread bet. But by using the exchange traded fund, we sort of, we spread the risk, all your eggs in one basket. When what we've got in this case is, we've got a basket of shares. And these are the top 10 holdings in that particular ETF. So we can trade long or short, and again, shares and ETFs. We can use spread betting, say stick to bigger shares, especially when you're first starting out. I normally go with 100 million sterling or more, because the smaller shares tend to be more volatile. The spreads, the difference between the buy and sell price, tend to be quite wide. And remember, the buy and sell price being wide, you need to jump quite a bit just to break even. Don't just think the US or UK. There's great opportunities in Russia, Far East, and I'll show you a couple of the overseas ETFs as well. Well, in fact, here's one now. This is Mexico. And again, you trade this through a spread betting company, or you can just buy it through a US broker. And again, these are the shares that are in there. And it's actually been doing quite well. In fact, Mexico's moves quite closely with the US. Now, this is the sort of stock you don't want to trade using my system, because it's illiquid. If you see, it's like quite boxy. So, you can't really get a moving average or get a trend on a share which is relatively small and doesn't trade very often. And when it's a share, there's certain bonds and other instruments. So when you see a chart that looks like this, it's not the sort of thing that you want to spread bet or trade, because it's just not liquid enough. The Dow 30 shares is a good place to start. Many of you have heard of the Dow Jones Index. It's got 30 companies in there. They're all big companies and they're all quite easy to spread bet, and they're liquid. Remember, if there's a particular US share you find in Sharescope and then you go onto IG Index and you see, they're not offering it, it doesn't mean they won't do it. Pick up the phone and basically say, look, I want to trade XYZ. And many times they'll still quote your price. It's just that it's not necessarily in their system. Shares trade in cycles. You remember what I said earlier? We've got to have an expiry date. It's just, there's got to be a contract. There's got to be an end date. Normally it's March, June, September, and December are the cycles. But remember, as it gets closer to the expiry date, you can roll over. So you close the current bet and you open the new bet. And the other thing is to say, you don't have to hold it. So even if you have a December 2014 trade, it doesn't mean you have to hold it all the way to December 2014 or December 2015. You can trade in pounds or euros, if that's your base currency, eliminating the currency risk. So let's say, for instance, IBM trades in dollars. It's $160 a share. and you say, well, I don't want to bet it in dollars, I want to bet it in pounds, you can. So even though the underlying share is in dollars, you can still trade it in pounds. It's tax-free. If you're spread betting, if you're obviously trading through a normal broker, you still have your capital gains allowance as well. So currently it's around £11,000 in the UK, so that would still be tax-free. Sharescope, as I say, Plus has most US charts. You can dice and slice the information any way you like. There's a massive amount of free data, especially in the US, and that's another reason why I want to push you more towards the US. TheFinancialTrader.com, you have a password which came with your package on the cover letter. If for any reason you lose it, send me an email and I'll get a replacement. You've got links there and updates that you can get data from, especially the US. Many companies, people say, oh, I don't know much about America. Believe me, you walk down the high street in the UK or wherever you are in Spain or Europe or Australia, you know the brands, Starbucks, Apple, McDonald's, Exxon, Microsoft, they're all US listed stocks. So you know more probably about the US market than you really think you do. And I say, if I was starting out, I'd go straight to the US market. I'd go straight with the US shares because you've got more data, you've got more choice. And I don't know whether it's me, but I've always found that they've trended much better as well. Maybe they're more liquid, and ETFs as well. So the FTSE 100 and the Dow are still very popular with private clients, yet most private clients don't make money. So that might be telling you something. Understand most indices are correlated. All right, what do I mean by that? Correlated means that if one market moves up, then the other market follows. For instance, the FTSE 100, the DAX, the Dow, the S&P 500, they're all stock indices, whereas gold or corn are not. Yeah, so be careful when people are sort of just trading loads of indices, and really they're trading the same thing. It's all correlated. Volatility is what causes most traders to lose money. Many times they've got the right idea, they know what they should be doing, but what happens is they get thrown out by the volatility. That's where binary bets can sometimes help, because you don't have to have a stop. So my advice to you is trade smaller, give yourself a little bit more breathing space. Don't put yourself under pressure. A lot of traders, what Jesse Livermore said earlier about they beat themselves up. Many times you're going to beat yourself up. You're going to put too much pressure on yourself. Trading smaller, giving yourself a bit more breathing space, you'll be more relaxed, and it's more likely that you're going to do better in your trade. Most of the time, stock indices will be dull. Remember what I said, just like some of the commodities, resulting in lots of stop outs and whipsaws. It's just part of the business. And as I say, many traders, they try to trade markets that they can't afford. And that's not, really stay within what budget you have. Financial stock indices can be profitable, as I say, but balance yourself out. Better to have, say, gold, S&P 500, oil, or some individual shares, rather than just be trading just all stock indices.